All right. It's Nick. Appreciate you guys hopping in and being patient with me. I know I like to save these videos for Sunday, give you something to look forward to, rather than viewing on Friday or Saturday and then just waiting on a weekend. Keeps things fresh in the mind. So I wanted to pop on, kind of explain this here that I tweeted out on Saturday morning, give some more clarity to it, and kind of what it fully means. Um, because there's a lot of big similarities in regards to the weekly trends that I'm kind of following and how it kind of encompasses the January and June run cycle combined, that I've been talking about for a while now. Just want to highlight a few things and cover some CPI coming up on Wednesday, along with the Gamestop ex-dividend date, what it means, historically what it did to Tesla. But before I get into that, just want to preface, I'm not a licensed financial advisor. Do hold a few securities license, my Series 7, 63, and my SIE, but I'm no longer sponsored by a firm, so take what I say with a grain of salt, and just know this is some educated analysis based on things that I'm looking at. So as always, kind of start in the macro, looking at the weekly chart, so every candle represents a weekly trading range. Goes back roughly 3 years. I kind of got it just showing these trend lines. I know they aren't going to be completely accurate in regards to the weekly. It does show true respect on these, on the uptrends, but these more so play a factor on the daily candles. I want to preface, this is going to be probably a 25-ish to 30-minute video. Just when I'm kind of encompassing it all, I'll try and keep it concise, and show you some things I'm looking at, but let's go ahead and hop into this. So some things that I kind of brought up within that tweet, we'll kind of start with that on what I'm looking at, is the standard deviation bands and the 200 SMA along with the 50 EMA are just kind of a combination that I use both on the macro and the micro, just to show and forecast momentum and key trends to break over. So what I tweeted about was kind of the correlation of these crossovers and what they mean, and kind of what we've seen over recently on the 34 run, and how to depict them. So the first one is kind of a two-step confirmation to show that the breakout's occurring and how we can kind of get ahead of the curve a little bit there. First one is always like your standard deviation cross, or the fact that you hold it. We'll get into that on the June run. But your standard deviation crossover on the weekly occurred here, week of the 18th and 21. And then obviously everyone knows what took place on the 28th, so this is encompassing that whole entire week. But during that week, we also got, so here's step one, we got the crossover of the standard deviation line. Step two, this one here is actually the 50 EMA. I used this one and kind of preface it because leading up to this, no one quite knew the full extent of what was behind it. Obviously, you had DFV talking about Gamestop, but I actually hopped into AMC 111 of 21, so right around here, because there's a lot of less focus on it. I just saw more upside potential at the time. But we got the crossover in standard deviation line, and then early that week of the 25th, we crossed over the 50 EMA. So on the weekly, like, that's a massive crossover, especially once you're above the standard deviation line. And then if you fast forward here, you kind of get this break up. You test your 200, break right through it, in the pre-market there, of course. And then intraday, it shows a high of around 20.3. I think we got up to 24-ish range, if I remember correctly, in the pre-market, but it's not going to catch these on the weekly candles. So we broke the 200 SMA, and then we got flushed down underneath it, basically right back onto the standard deviation line. Got this reverse J action, came up, tested the 200 again, broke through it, and then you came back down. But if you notice, we stayed above the standard deviation line the whole time throughout here. I think it was just kind of again, a surprise from the short sellers, them thinking they can just hold on to this and the long holders or the apes are going to just kind of close out. Well, we came back down, retested the standard deviation line, and then part two. So this is kind of one schematic, and this is like your second schematic if you want to look at it that way. There's different similarities without or throughout. but we stayed above the standard deviation line. So when I put standard dev X, that just means standard dev cross, and I put in parentheses held. Well, we held this line, and then we got the major break over, like the true break of the 200 SMA, and that's what kind of gave us this forecasted movement up, kind of this big pop here. Came back down, stayed above the standard deviation, tested just a little bit under on the weekly, and then we shot off. But it mainly started from this crossover back here. So on this run over here, this is where it kind of combines the two runs together, in my opinion. We came down, actually used the 200 SMA on the weekly as support, came and bounced off of it when we initially tested it. And then this line here is going to be a key one that comes into play as we get moving up. We came up and tested that, came back down under the 200 SMA, and then got that deep kind of push down just the week of when I called my zone of strength at the time, 314, and then we got the push up. So this was kind of the indication that the demand was there when it shows kind of a deep push down like this, and you get like a relief bounce. And we came up, broke the standard deviation line, so part one from back here, broke the standard deviation line. When this occurred, we got our second push, closed just below this previous high on the intraday, and then the next week is when we got that nasty push up and broke through the 50 EMA. So this is where it kind of crisscrosses, because this break here is about the equivalent of this break here, and they dragged it down underneath the standard deviation line. This case they didn't. There's just different sentiment across the board that could have played into the factor there. Throughout all of this, we had nasty dips within the broad market. Just a lot of volatility and inflation kind of coming to the surface. And then we came back down, stayed on the standard deviation line, came up here, and this kind of false breakout, I think the big reason this got rejected was not only was it trying to break the standard deviation line, but you're also trying to break the 200 SMA. So when we came up, tested it, got that nasty push up, everyone, including myself, saw that the move was there, but we just couldn't quite have the volume to break through the both of those at one time along with a macro uptrend. So it was an easy time for them to kind of push it down and carve out the bottom here, and slowly work our way back up. What's special about last week is the week prior we tested that standard deviation line, came up and tested the upper trend line, but then we closed down underneath this 1360-ish range. But this week, and I'll show you on the daily here shortly, we actually started above this range, well, dipped down, and had our body starting above this range, and we broke through the standard deviation line, tested the 200 SMA, and we actually broke above it. The good thing is now we're above the standard deviation line by a decent chunk, and this test here with not necessarily the reject but the retrace along with an uptrend is honestly very healthy for this continuation, because you'll see what it's coming up on the next week here, but this is kind of setting you up for your June style run in regards to the 200 SMA, that stays there. Well, we got the one, we broke through the standard deviation line on the weekly. I would love to hold above this, and I'll show you here in the daily here shortly what that's looking like. But this crossover the 200 SMA is really what I'm looking at in order to kind of complete this full movement and get some sort of pounce style. But there is prerequisites involved to this. So a few things I'd just like to point out is kind of how this weekly close is actually very big. I just want to remain a little bit reserved in regards to this because of things that have to occur for it to continue. But if you look down here in the MACD, your blue line here, your MACD line, exponential line, we actually have more of a significant crossover right now than we did on that 34 run. Which I get, like this kind of came as a surprise and had that big influx of volume, followed by the deep carve out of like no volume. But the setup right now in the MACD on the weekly is better than what we had in the 34 run. So I just want to preface that, like it's set up extremely well. RSI is still relatively low on the weekly, but we will get into the daily here and kind of break that down a little bit more, because a big key factor kind of took place on the daily last week. I know some people in the Discord were talking about this, and I hit on it in my live stream as well on Thursday. But what occurred here is extremely bullish in my opinion, because we haven't really got to cross over this line in quite some time, literally like since pre-34 run. So your 50 EMA is right here. This is also your 50 EMA here. So it's kind of funny, on the daily, when we got that crossover, the 200 was also lining up with it at the time, but this crossover, the 50 EMA, kind of forecasted or signified the move up that we were getting ready to have. But just for the sake of the video, I'll kind of zoom in here and show you why this intrigues me so much, and what it could potentially lead to as we get into this week. So the 50 EMA here, we got that nasty push off the bottom. So we came up, tested this top range, tested the 50 EMA multiple times throughout here, from beginning of July into now. Well, you'll see how they kind of use this regression line that I can zoom out just a little bit real quick to show you where it leads up to. I just have 3 of these lines drawn in here just to give you some more perspective on regression lines that we had to hop over. Well, they kind of use this regression line to also hold us under the 50 EMA along the way since the beginning of July there. But I do want to show here why it's so significant that we broke this line and we also broke the 50 EMA. So getting into this, you'll see this uptrend that we continued to hold, and how accurate these lines can be on the daily candles in regards to respecting them or treating them as support. Well, when we tested this up here, we're coming off the bottom, so it's going to be pretty hard to break this regression channel and the 50 EMA without some major volume kicking in, and we got it. Like, we got the strong volume, but we hopped from this bottom trading range, broke through this one, tested the top one, and they kind of just used this regression line to hold us under here. The significance here, though, is that we went up, tested this, went all the way back down and retested the breakout zone, and then came back up, and we actually broke not only the standard deviation line, but the regression line and the 50 EMA, all on 7/7, so that would have been Thursday. Then we got that nasty push down in the after hours from the Gamestop news, but we held that 14 mark, which was just honestly extremely bullish. I was live streaming at the time on YouTube as I was kind of absorbing the news as it came in. Then I had to hop off for the night, but the fact that we opened on a daily above this 50 EMA mark, the last time we did that was actually this line right here. We went up and tested it, broke through, but we closed down underneath, and the following day we hopped up quite significantly and held above that 50 EMA line. So this is the mark I'm really looking to hold, which is about 1380 mark is roughly what the 50 EMA is at currently. But the fact that we popped up here and rejected down doesn't concern me, because your MACD is still curling to the upside, the demand is there, your OBV is rising on the daily, and we honestly needed a bit of a cool off on the RSI. It's still a little bit hot, but there's plenty of upside to go, and like I said, AMC doesn't always respect that. Like, look at the same point that we're talking about before. Your RSI was way up here, and then let me back up. Alright, so this line, this is your RSI peak, came down, cooled off just a little bit, and then shot up, and then they used some major resistances to hold us under. This is extremely bullish though. Like, our RSI still has some room to go, plenty of room to the upside, especially if it wants to break out, but I wouldn't mind, and this is where CPI and the GameStop news can come into play here. I wouldn't mind, or I wouldn't be surprised if there is a slight cool off sometime throughout this week. I think Thor could bring some big movement, kind of hop us back over this trading range to get us up into this zone where we're going into testing this major regression line. Because once we're through this line, this is kind of signifying that the macro off the 34 run, even back to 72 run, is broken. So This is a big one I'm looking to break this week. I'm not sure if we're going to get it this week or not. It just depends on the CPI data that I'm going to kind of break down here shortly. From a daily perspective and a weekly perspective, this is an extremely bullish movement. I would like to tomorrow, if broad markets, I think they might be a little bit green leading up into the CPI data. Just with uncertainty, it might be relatively flat or some green markets. Historically, we've always seen some bloody Mondays. That's just how it is broad market right now with this uncertainty kind of flowing around. So 2 scenarios for tomorrow. I could potentially see us retesting the 1380 zone if broad market is bloody. And when I say bloody, it's usually about 1.5% or more red on SPY. If that's the case, there is a chance we could go down and test that 1390 mark. I wouldn't like to see that. I'd like to kind of hold this uptrend that we're in. But I just kind of like to preface with that. The one thing that is really exciting to me is that AMC has a lot of news to digest. We got the Uber Eats deal where they're delivering popcorn via Uber Eats in Chicago. Go ahead and send your boy Kenny some bags of popcorn. I'm sure he'd love that. Along with the KC area. So I am actually going to try that out this week. See some personal tests on what it tastes like and just the ease of use. It's Uber Eats. I mean, it's going to be easy. It's a good idea. And I think that's foreshadowing to some in-store products coming soon. And a profitable quarter too, but we'll get in that in some later videos. But we got that news, we got the Thor, and then just continued broken box office records that I really think I don't. There's like a 15 to 20% chance we retest this 1390 tomorrow. What I do see is us getting some sparks out of the morning, going up for an early retest of like the 1590, 1585 range, and then we might maybe retrace down to 1480, 1490. That'd kind of be more likely. I'd like to get up in this range here. But with broad market potentially being red on Mondays, like I said, we could go down and retrace, but that's not a likely scenario for me. And then kind of leading into CPI data on Wednesday, I think we'll kind of trade a little bit in this range to start the week. There is some major bullish movement on the other side of that 1550 mark that they really don't want us over. It's been a pretty respected resistance in the past. But if we can get over that 1550, 1530 mark, we could be pressing some 16s early in the week. The one thing that could potentially stretch this run out and prevent kind of our next squeeze-like scenario is CPI data and the potential effects of the Gamestop dividend. So, like I said, I would love to test this 1585 out tomorrow. Potentially, if that mark breaks, we can get that 1640 test. That's a really big one historically if you zoom back. That gives a lot of, this is kind of like my pivot point for a bullish continuation up to like the low 20s to upper 20s. But this is a key zone for me. So I'd really like to see this 1640 tested this week. If we manage to break it and CPI is bullish, there's like if we break 1640, I think we fully test this 20.25 zone. I know it's a big jump, but you'll see what's on the other side of 1640 when we get through it. It's going to also break this regression channel as well, and that's going to bring a lot of movement. I think that's going to bring a lot of people back into this, reignite some hope within. But I want to wait for a couple things to occur, because until the 1640 crosses, I'm still pretty neutral. I have some 14s expiring Friday that I'm still holding on to. I trimmed off some around 200%. But I mean, I fully expect us to close about 14 this week. It's just I see the upside there in continuation, so I'd like to get that nice pop up to 1630 range either tomorrow or Tuesday. With Wednesday, I think the shorts are still extremely kind of over leveraged to one side, so I just kind of want to get in here on SPY and just show you from a broad market perspective on what I'm looking at. This local bottom here at 362, we did leave a slight gap, maybe down here, um, that I could potentially see them. I don't forecast this. This is just a potential. Um, Trying to fill this one time. I don't know if it's going to be off of this CPI data. That'd be a nasty, nasty move. But we did have something similar before in June. So I just want to kind of preface that because CPI, a lot of people are weighted saying this is very bearish news coming out. CPI is going to continue to rise. I've been following European news a lot and kind of what they're forecasting as well. Germany actually beat CPI data. Obviously, their economy isn't the same as the U.S., but it has kind of been a forecaster for us. So I think the 8.8 to 8.9 kind of estimates, they're trying to overshoot them, just like with any rating agency from 2008 and 2000 era. Like they're trying to. I'm not saying that's what we're in, but I'm just saying these agencies operate from a political standpoint, in my opinion. So I think the 8.8 to 8.9 is a bit extreme. I don't think we actually see that. I think we come in as a beat, potentially around 8.6, maybe 8.5. I think markets would literally have a short squeeze broad market wise if we somehow muster 8.5 move. But I think we'll beat estimates on CPI. I think it'll come in lower than what people suspect because it is backwards looking. That's the only kind of preface that I like to make, is that because it's backwards looking, it could be a 8.7, 8.8. But I think it's going to be something similar to Germany CPI beat, to where everyone's weighted to one side and the majority is always wrong. And we aren't quite done with this upside movement on SPY. I think going into CPI, we've really been kind of flirting with this zone right here, like 389.75 area. I think we could, heading up into CPI, continue this bull rally a little bit, potentially to 392 tomorrow. It just kind of depends. Like, I don't like my Mondays too much in regards to bullish sentiment, but we'll see what the week is looking like as we get into it. But I think we need to fill this gap up to 402 before any more downside, like true downside, occurs. So my theory is that we're going to beat CPI. They're kind of fluffing the numbers to kind of show a beat as being bullish. I mean, 8.8 to 8.9, those are some crazy high estimates. But it could show a peak is there before our true recession comes, which I think is actually late this fall, potentially even early next year. But with midterms and everything going on, I think this is going to be a political market in regards to market dynamics. So I wouldn't be surprised if near term, maybe leading up into CPI, we go up and test this 397 mark, which will also be like the 50 EMA on the daily. And then come CPI, initially I could see them try and fluff it down, just because I said shorts are overweighted in the market, to where we can go from 397 down to like a 392, and kind of just a quick flash down when the news initially comes out. The good thing is it's an hour before market open on Wednesday, so that'll give time for the market to somewhat digest it. Probably open red on Monday or Wednesday, and then continue this uptrend. I really think we need to fill these gaps to the upside, like I said, before any big drop comes. So if we beat CPI on Wednesday, you can guarantee almost that we'll run to 402 plus, maybe even retest this 410 zone. And if that occurs, like if we do beat CPI, I fully think that we'll get that 1640 break on AMC. So that's the major thing I'm looking for, is this 1640 break along with this regression channel break, which will line up on Wednesday, which is actually literally to a T almost. So that's the line I'm looking at. 1640 is kind of our pivot. If that's broken, I think we test 1884 and then potentially even a 20.25. If that's the case, if CPI comes in and it is 8.8 or 8.9, don't be surprised if we ride this 50 EMA kind of up, which will be around low 14s or upper 14s. But I think we'll kind of get caught up in this next channel and finally confirm that we're in this uptrend here. So if CPI does kind of come in at those high numbers, we'll probably ride this channel down, this regression channel down, and close the week around 15. And that's what kind of delays our movement into the following week. Obviously, you have OPEX this week with the standard option expiration. So those are your two scenarios. Just depending on CPI movement, we either touch 1640 Monday or Tuesday, and then ride this regression channel down to close in the up like low 15s, or CPI beats, we'll break this and press 1884 to 20.25, roughly somewhere in those zones. But I do want to quickly hit on the Gamestop dividend and what it may mean for us in regards to the meme basket. So I have Tesla down here, which I'll kind of zoom into a little bit. So Tesla did that 5-for-1 split back in 2020, August of 2020. I believe they actually announced it in March of 2020. So when that announcement came, it was actually at a 52-week low, hitting the 200 SMA on the daily. They announced it here, and then let me pull up this article real quick. It shows here, yeah, August 11th. It was announced back in March, and that's kind of when, or like the idea of it at least, it wasn't fully, I guess, confirmed on the dates or anything like that. And on August 11th of 2020 is when the board of directors approved and declared the 5-for-1 split, the common stock, in the form of a stock dividend. So this is the exact same thing as what GameStop is doing. Basically, it says each stockholder of the record on August 21st will receive a dividend of 4 additional shares of common stock for each then held share to be distributed after close of trading on August 28th. So I just kind of want to break this down for you here. So August 11th is when this news came out. And then if I pull up this other thing, this is where the 52-week low was upon announcement. Where we go here? August 11th. Closed at roughly, let me see, 500, give or take. So everything you see on here is pre-split. So with the 5-to-1 split, they're getting 4 additional shares in this style movement. So pre-split, Tesla closed at 500 roughly. So you'll just take this number to get the dividend split, 5-for-1. Let me make sure I got this data right here because this isn't lighted up. Okay. Upon announcement, 500. Okay. Time to show dollar split. Alright, so yeah, as announced, sorry about this, I'm reading another article, but I'm trying to make sure it corresponds to the chart here. So all this data is adjusted for this 5-to-1 split, even stuff previous to it. So like here, you have the 270, obviously prior to the 5-to-1 split. The stock to be trading on a different range here. But this is the announcement date, kind of when it finally got approved, with the date of the dividend distribution being on August 21st. So we got this nasty push up all the way from, this is post-split numbers, 272 up to 503. So what occurred here was on 8/31. This was the date of August 21. Okay. I just want to make sure I got these dates right. Record date. Yeah, okay, so the record date was August 21st. And then it says, be distributed after close of trading on August 28th. Trading will begin on stock split adjusted basis on August 31st. So you see this nasty bull run that it got leading up into this. Well, this is actually August 31st here. So after the close of this trading day is when it started trading post-split numbers. So when this occurred, obviously you had the injection of the 4 additional shares. So it's gonna initially drop the price here, but everyone was like, oh, well, when Tesla did that, the share price dropped and it took forever for it to squeeze. Well, Tesla isn't the same as GameStop. It's not the same as AMC or anything like that. So basically just what I'm trying to show you here is since announcement, they shot the price up And this is what you want, because when you're doing that share split, yes, the price of GameStop is going to drop in value by around the 3x amount for the 3 additional shares that holders are getting. So when it dropped down to here, obviously it's given the perception that shorts are making a lot of money here. But you got to understand that when that split occurs, it's going to take the trading sessions to kind of have your settlement. They're also trying to locate shares to be delivered, because the shorts are the ones that deliver those dividends in the form of a stock. So once that kind of fully gotten shook out, then you kind of started this Tesla style squeeze, which I've just mentioned that AMC and Gamestop are most likely going to be doing. So no, post July 18th, we're not just going to kind of fall off a cliff. GameStop might have some volatility within that, but what it's going to do is post split, like these numbers are much different than GameStop right now. So if, let's just say hypothetically, I just want to show you this for the rise up, drop down, and kind of continuation of the stair step into the biggest movements. So let's just say hypothetically, if we pull up GameStop up here, if this wants to load, let's see, this is when it was announced, and then we got this kind of movement up. Let's just say hypothetically the GameStop closes the week, and this is not necessarily a stretch, like if CPI data is there and the movement is strong. If we break this 134, 135 ascending channel here, we could go test 151, 150 zone prior to the split. You divide it by 3, then every share's valued at $50. That alone is going to kind of influence or allow new investors to step into that. Because the share price is cut into a third. So when that occurs, not only are there going to be more shares out there coming from a free reserve, so it's not coming just into the open market, it's going directly to the shareholders via a free reserve, aka the billion shares that the board of directors got approved for recently. So when this occurs, the only way for kind of that same movement that Tesla had to occur is for your long holders to kind of sell off their securities. And I don't know about you, but if you look at this OBV, it doesn't look like GameStop holders are selling much of anything. So it's not only going to influence more buyers. I myself will probably even be buying post-split, but it's going to kind of just give us more of that push and volume without diluting the shares itself. So I just kind of want to preface that we'll most likely climb up to 145, 140, 150 range maybe by end of week. If CPI is bullish, I think that's a very big possibility, and then it will kind of drop off, meaning GameStop to around 136 after the split occurs. So like next week, I think it begins on the 21st. Is when that post-split trading price starts, or maybe it's the 22nd. Yeah, you get them on the 21st and it starts on the 22nd. When we start trading the post-split price, all of this is going to be divided by 3. So take that with a grain of salt when I give you these numbers. So I think we could break this trend line and we'll come down. We could even test a lower low. So GameStop might experience some chop via that dividend, but shorts are going to have a tough decision. Like they're the ones that have to pay out this dividend, so they're either going to have to choose to micro cover some of these positions this week, or think that they're just going to get away with more shares, or I don't know what their thought process is if they don't push this thing up to 150 on a micro cover, because if they stay in this thing, like once this dividend kind of fully shakes out, it's going to turn into a Tesla style macro squeeze, and that's when the second scenario comes into play for AMC, is where it's in the meme basket. So if we don't kind of break the 1640 mark this week and CPI does come in at those 8.8 marks, I think we'll close around the 15 range, potentially. But if GameStop does continue to run up, we'll kind of trade in tandem with them as well and break the 1640 mark and press some upper levels, which is what I'd like to see. I don't think we'll get dragged down with GameStop near as much, but if the broad market does drag down off the CPI, then yeah, we'll most likely close in the upper 15s, or potentially somewhere in this channel. But basically what I'm trying to preface with this video is that we're over some key macro trends and very, very close to some pivots within the graph here. So I'd just like to say that we're close. We're not quite there yet. There's a few other macro indicators that I want to see break. But like I said, on that weekly candle, if I come back to where we're at the beginning of the video, appreciate your patience because I know this is pushing some time here. But this weekly candle here, this is why I'm so bullish, but I still want to kind of restrain myself because there's work to do and big data being released this week. Whenever this 200 SMA does fully break, now that we're over here, when we get through the 15, like a true break of the 15, not only is it tipping the zero gamma line and introducing more volume from the market makers, which is going to be a big pivot point, we're also breaking the 200 SMA on the weekly. So whenever this does occur, I think it'll just smoke 1640 if CPI comes in bullish. They're going to try and hold this up under 1640 when this does break. But then if CPI comes in bullish, like the markets react bullish to it, we'll have no issue breaking this 1640 and get up into these upper trend ranges and testing this 50 EMA. So I know it's a lot of verbiage on the video, kind of a lot of back and forth. I hope that kind of encompasses my viewpoint on it and things going forward. I'll try and keep it a little bit more simplified. I just wanted to get a lot of data out there that I've been talking about, both from the Discord and on social media. So again, appreciate you guys' patience. If you're able to give me a like, leave some comments, spread this out where you can. It just encompasses some big viewpoints on microdynamics and things I'm looking at for this week. So to encapsulate it all, break of 1505, 1515 on AMC should give us the 200 SMA break on the weekly, which will push us up towards the upper 16 mark, leading into CPI. CPI is a pivot point, or kind of the directional sentiment for the week. If CPI comes under 8.8, I think we run through 1640 and could test 22.5 on the week. It's just that has to occur first for that movement to take place. So it's really kind of dependent on CPI this week. And then if CPI comes in negative, we'll most likely trade in the upper 15s, maybe within the 14 range to close out the week. And then the movement comes next week off of the GME split. So almost there. I'll give some more updates within Twitter. I just kind of hope this gives you guys some more clarity to my thought process and what to expect for this week. As always, invest for yourself, for your future, your risk tolerance, and let's have a good week. There's going to be a lot of volatility, so I'm looking at a ton of other trades outside of just the memes. This is just a breakdown of what I'm looking at, all encompassed in a 40-minute video. So appreciate your patience. I'll leave Rico's Discord link in the bio. I'm in there almost daily, kind of helping the guys out, bouncing ideas off other traders, and talking about other movements. I know Micron, I hit 100%er last week. AMD hit 100%. Mullins looking into a good movement here shortly. So there's a lot of other runners that I post about in the Discord. It's just within the social media platform. I'm primarily on the memes right now. Obviously, I'd like to introduce those other ones. It's just like these are our main focus for me right now. But if you want some other plays, we're always scalping SPY, SPX, different movers throughout the week. So click on the link in the Discord, leave a like, comment, subscribe. Like I said, appreciate your patience, guys, and looking forward to a very killer week with volatility.